Hey everyone, welcome back to Profit Path. US stocks are rallying today as markets gear up for the Fed's upcoming meeting. Strong AI momentum, cooling inflation, and high hopes for rate cuts are pushing tech forward. If you're new here, smash that subscribe for daily market insights. Alright, we're 26 days into the second quarter, and stocks are higher. So far, Q2 is shaping up to be better than the first 3 months of the year. The S&P 500 is on pace for its best quarter since 2020. Year to date, the index is still up nearly 8%, so some cautious optimism in the air. Let's dive into the numbers and top stock movers today and see what's driving the market. Top line stock futures are flat to slightly up ahead of the Fed's rate decision expected this week. Investors are pricing in a 25 BPS cut, with hopes that Fed Chair Powell will signal more easing to come in the post-meeting remarks. It's all about the statement and press conference at this point. Recent cooling inflation data has bolstered hopes that the Fed can ease policy gently without rocking the economy. Reuters reports that a majority of economists expect the Fed to signal more rate cuts are coming later this year. In our lead story today, Nvidia shares rose 1.6% pre-market after Oppenheimer upgraded their rating to outperform, citing strong demand for AI chips. Other AI names also rising: Tesla, Meta, Oracle, and more. We'll get more color on Nvidia and other semis when the chipmaker reports quarterly earnings this Thursday. It's one of 7 mega-cap companies reporting this week, along with big banks like JP Morgan, Goldman Sachs, and Wells Fargo. Speaking of which, shares of Oracle Corp jumped 6% pre-market after the company raised its forecasts for annual cloud bookings, signaling robust demand for its cloud infrastructure and AI offerings. Wow, Oracle now sees full-year cloud bookings rising 2%, up from prior guidance of 1%, and in Q4 bookings are expected to rise 3%. Consensus estimates were for 1% growth. So clearly a beat here, and this comes after Oracle topped Q3 revenue estimates last night as businesses ramp up spending on cloud services amid resilient demand. Looking at consensus estimates, analysts on Wall Street seem encouraged by Oracle's performance. In fact, they're lifting price targets. For instance, Barclays raised its price target on ORCL to $120 from $110, reiterating an overweight rating. Deutsche Bank raised its target to $125 from $120 with a buy rating. Cowen boosted its target to $130 from $120 with a buy rating as well. So strong AI demand and healthy cloud bookings are helping push the S&P 500 and Nasdaq toward record highs today. Let's broaden out to more top movers today. Shares of Moderna Inc. rose 8% on news that the company is developing a new mRNA vaccine for influenza. This flu shot could potentially be a yearly jab instead of the regular flu vaccine. So very interesting development here. Moderna to begin a phase 2 study of the vaccine candidate in the first half of 2024. And lastly, Bed, Bath and Beyond shares are soaring 28% on news that the struggling retailer reached a deal to sell its buybuy BABY business to a group of investors led by former CEO Mark A. Lee, who previously took the company public in 2021. This deal is expected to close in the next 2 weeks, so that's a quick overview of today's movers. Let's turn to the macro backdrop. Inflation pressures are showing signs of easing, especially from the wholesale or producer price indices. This softening adds belief that the Fed could start cutting rates sooner rather than later. Last week, we saw consumer prices rise 0.4% in April and 3% year over year, but the core index, which strips out food and energy, was only up 0.3% month over month and 4.3% year over year. Today we got the latest producer price index report. Headline PPI was flat in May and down 0.3% year over year, while core PPI rose 0.2% month over month and is up 3.3% year over year. So both reports suggest that inflation pressures are indeed abating. With that said, let's hit the other major US equity indices. The Dow Jones Industrial Average is little changed, the S&P 500 is up 0.4%, and the tech-heavy Nasdaq Composite is up 0.7%. So a little bit of rotation going on. Treasuries are barely changed to slightly lower. The 10-year yield is hovering around 3.7%. So it did tick down a bit. Gold is flat, oil is up 0.9%, and Bitcoin is up 1.5%. So risk assets are seeing slight gains today on hopes that the Fed will deliver a rate cut this week. What should you be watching this week besides the Fed? Well, key data reports include the missing CPI and PPI reports if not already released, May employment reports, and the Fed's dot plot for future rate expectations. A hotter than expected jobs report could bolster the case for a longer pause in rate cuts. On the other hand, soft employment data might increase bets on a quicker easing cycle. Either way, this Friday's jobs report will be another crucial piece of the puzzle for the Fed. Risks to watch. Number 1, over-optimism about rate cuts could leave markets exposed if the Fed does not cut as much or as soon as expected. And number 2, sentiment on AI and tech names might be challenged if earnings reports come in below estimates. Valuations on many AI and tech names are quite high, so any miss might spark profit-taking. To wrap up, market sentiment is positive today, driven by strong AI momentum and rate cut hopes. But keep an eye on Fed signals and inflation data as they could shake things up. What are you watching more? Oracle and AI or macro inflation signs? Drop your view in the comments, and if this helped, make sure you're subscribed to Profit Path for sharp market updates. Thanks for tuning in, and we'll see you back here tomorrow.